Good morning. Welcome back. So this is session 2 of the trading room. Well, this is trading room session 2. And before we jump into what we normally do, which is like the top-down analysis, going over our charts and everything like that, I did want to spend the first 10-15 minutes talking about one specific habit that I believe is important as a successful, disciplined trader, profitable trader. The last session, we talked about the 3 pillars of a successful trader, which was psychology, risk management, strategy. But today, we're actually going to take it a little further and then put into practice how to build our daily bias. So that's what we're going to go over today. I kind of wanted to give like a quick little backstory so you can understand why I believe this is an important habit to have. And it's super short. When I first started trading, I literally would open my chart and look for a trade. I didn't know what I was looking at. I'm gonna be honest. I didn't know what I was looking at. I didn't have a plan. I didn't have a strategy. And I did have a strategy. At least I thought I had a strategy. But if knowing what I know now, I did not have a strategy. I didn't have a plan. I didn't have a direction. If the chart looked like it was going up, I was going up. If it looked like it was going down, I was going down. And honestly, I would convince myself that anything that looked like my setup was a good trade. Eventually, though, I kind of realized that's not how profitable traders trade or disciplined and successful traders trade. They don't just get on the chart immediately looking at an entry. I don't just open the chart now immediately looking for an entry. I start with my plan, my checklist that y'all always see that I keep on the right-hand side of the screen. That's the first thing I go over. That's a daily bias. So let's get into it. So what is a daily bias? A daily bias is basically, simply put, is the directional expectation for the day based on your analysis. So I want to make an emphasis on expectation. I didn't say prediction. Because when you say prediction, that kind of means the market has to do something, and it really doesn't. Like I always say, the market is going to do whatever it wants to do. So when you say expectation or a bias, you're basically saying, like, based on what I'm seeing right now, I believe the probability of price moving in this direction, XYZ. That's more of like an expectation. I'm expecting price to do this based on the information that the chart is giving me. And I think that's important because trading is probability. So we're not trying to predict every single candle that the market gives us. We're creating a plan based on the information the market gives us. So I know, I like my analogies, or I like my analogies. So one way I think about my daily bias is like a roadmap. So imagine you're on a road trip and you have a map. You know where you're going, you know what route you're taking, but that doesn't mean that you can magically stop traffic or magically stop an accident or magically stop your tire from hitting the pot. Like, things still happen. But that doesn't change you getting to your destination because there was a little traffic or there was an accident. Your bias basically works the same way. It's like your map. It gives you the direction. It helps you filter out like the longer things that might take a little long, like roads or routes that might take a little longer, roads or route that might be a little more congested. To help you filter out all that unnecessary trading and keep you focused on the actual trade that you're seeking. So like I said, it just gives you a direction. It filters out the low quality trade. Like if you were on the live yesterday when we were taking a trade, we ended up not taking a trade, but it's because it was a lot of low quality trade. Like I always say, yes, you can find a trade. You absolutely can find a trade, But would you rather struggle for a trade or wait for the high quality trade? Me personally, I would rather wait for the high quality trade, and that's what my bias helps me to find. So, how do we build a bias? So every morning when I get on these charts, the first thing I look for are these four things. Well, I know it says five, but the first four are the most important. So I look for my higher time frames. I look at my higher time frames. I look for market structure. I look at my key levels, and then I look at the overall context clues. And then, of course, we're going to break it down, and then that's what's going to give us our actual bias. So we're just going to jump straight into it because I do want to make sure I have time to go over the charts. So starting with our higher time frame. Our higher time frame basically helps us just to zoom out and look at the bigger picture first. So before I jump into like the 5-minute chart or the 1 minute or the 15-minute chart, I want to know what the overall market, the overall picture is telling me right now. So I do that by starting with my daily chart, then moving to my 4-hour chart, and then even my 1-hour chart I would consider like a higher time frame. It's give or take depending on how the market is moving, but for the most part, I'll look at my daily chart and my 4-hour chart, and I'm asking myself, what is the overall direction of the market? Is price creating higher highs, or is it creating lower lows, or is it moving sideways? That's what the higher time frame is telling us. If our daily time frame and our 4-hour time frame are both showing, well, like, let's say strength to the upside, like they're both showing a bullish market, then I'm not going to spend the rest of my trading session looking for sales. If the higher time frame says buys, I'm looking for buys. I'm not looking for sales. Because that's basically setting the tone of what I'll be doing today. Now, granted, are there other things that I might look for that may tell me, okay, buyers may be losing momentum? Absolutely. But for the most part, I'm looking at my higher time frames just to give me the overall direction of the market. And that's it. Like I always say, I'm going to keep it simple. That's it. So now, going over, my bad. No, I didn't. I did. Okay, I did. Now, going over market structure. So when it comes to market structure, it's basically telling us the story between the buyers and the sellers. This is where I would say, when I say, oh, this is what's happening, the sellers are doing XYZ, the buyers are doing, this is where I get that story when I'm looking at the market structure. So when we're looking at market structure, after we look at our higher time frames and we say, oh, price is moving up. Okay, so who's in control if price is moving up? The buyers are in control. So are the buyers creating higher highs and higher lows? Or if it's sellers are in control, are the sellers creating lower highs and lower lows? Is price indicating that it wants to push lower? Or if it's sideways, or do we have equal highs and equal lows? No one's in control. This is literally the story. This tells us what is happening in the market. Because again, we're not trying to predict what's happening. We're just reading what is actually going on. And of course, they always say the market leaves clues. So our job is just to find the clues, read the clues, and make a disciplined decision from there. So, for example, what it means when the buyers are in control, we're looking for buys. When we're looking for buys, we buy low. So when price pulls back, we're looking for an entry for the continuation higher. And it's the opposite for sales. When sellers are in control, we want to take sales, or what's the other word? It's not coming to me. But we look for sales. So when price pulls back, we sell high. So we get in at like the highest point for the continuation lower. So buy low, sell high. That is market structure. So once we have the structure and we know, okay, cool, today's buyers are in control, then we'll start looking at our key levels. So key levels, I like the term key levels, but they also can be called like support and resistance, or your previous highs, your previous lows, like things of that sort. Anywhere where buyers and sellers have shown in the past they respect this level, or they'll step in at this level, anything like that. That is what we're looking for when we start looking for our key levels. And once again, we're still on these higher time frames. We're not on the smaller time frames. This is specifically our bias for the higher time frame. So why does these levels matter? Because in the past, price has already shown us that these areas are important. So again, we're not just predicting out of nowhere. We're taking the information from the past and applying it to what's currently happening now. So instead of us chasing price and from anywhere, or like it looked like it's going down in this current moment, but there might be a support, so we're chasing a sale and it hit the support and buyer step in. Instead of doing all of that, we cut all of that out by having our key levels, and so we know exactly where we're paying attention to. We're not looking for a trade everywhere on the chart. We're waiting for a price to come to our area, and that's what's important. That's literally what's important. That'll save us from hopping in too early or waiting too late or things of that sort, because we already know what we're looking for and we're letting price come to us. If price doesn't come to us, it's just a no trade day, and that's okay. That's the point of having your bias. So, my bad, it's out of order. But once we have our should I go get them real quick? Because they being loud. I hope y'all can't hear them. Anyways, once we have our market structure, once we have our key levels, now we put it all together, add our context clues, which basically is telling us what is the environment today. When I talk about like flights and stuff like that, when I talk about the strategy, one way, I could dumb it down, and not to say dumb it down like it need to be dumbed down, but how it makes sense to me is like when it's raining, like say you're taking a flight in the rain, or you're walking in the rain, you put your head down, price is going down. Or say it's sunny, it's a beautiful day, we always looking up, it's clear sky, price is going up. And then say it's foggy, we can't really see, but we got to get through the fog, so we like, look ahead, okay, whatever. That's what we're looking for when I say context. Saying that out loud is so crazy, but that's what we're looking for when we talk about context clues. What is happening today? Is there any crazy news going on? Like today, apparently CPI is supposed to drop. Apparently, that's when it's basically a report card for how price did for the past, I don't know how long, about inflation and deflation, all that stuff. So is there any major event happening? Is there, are we trading New York or Asian? Because the volatility is different in the sessions. Is price consolidating right now? Is the market even trending for us to even look for an opportunity for a trade? Because sometimes we can get on the chart and it looks perfect. We can say like, oh, okay, price for sure is going to do this. But then all of a sudden, Trump make a tweet and the market going crazy. That's why this stuff matters. Because it can literally change the chart, and then it can completely change your analysis. So you want to know the context clues because it changes how we approach the market. If it's a red folder day, we might trade a little different than we do when there's no news going on, when the market's trending and Trump didn't say nothing. We might trade differently that day than we do when there's news. Like today, like I said, it's CPI. I don't know what that means. Someone brought it to my attention. So now I'm on edge a little bit because I don't know what that means. So I'm not going to come into the market like I have been the past 2 days. Or it might be the same because the past 2 days has been a no trade day, but we'll see. But like I said, the context clues, it just helps you to understand what type of environment you're trading in that day. So putting it all together, You have, again, your higher time frame, you have your market structure, you have your key levels, and then you have your context clues. So once you have all of that, you can finally ask yourself, so what is my bias today? Is it buys? Is it sales? Bullish, bearish, neutral? It's really three. I don't know why I said five. It's buys, sales, or are you neutral? And I want to make sure that I put an emphasis on the neutral. Neutral is still very valid. Neutral could be, I don't have a bias right now because price is consolidating. Or neutral could be, I don't like where price is right now, so today's a no trade day. Neutral is still valid. Sometimes the market isn't giving you any information to work with. That's neutral. Sometimes price is moving up, but it's moving up messy. That's neutral. Sometimes you don't have a clean level to work with because price is in the middle. That's neutral. And sometimes the best probability that you can have is neutral until the chart can give you something to work with. So the best thing you can do is wait. Like how this week has been going. It's Wednesday. Still nothing. But what can we do? We can't beat the market up. So the best thing we can do is wait until we can make a disciplined decision. Neutral is still discipline. So I do want to put an emphasis on neutral. But the overall purpose of having a daily bias is because it just gives you a plan, it gives you a roadmap, it gives you a framework. Without one, you'll be chasing every single trading opportunity, trading strategy that you know. You won't have a plan, you won't have a map. You'll just be like, oh, price is going up, let me hop in with the buyers. Oh, price is going back down, let me hop in with the sellers. If you can avoid that, I would avoid it. It helps you to zoom out so you can see the bigger picture. You can see a big move, but if you don't have an entry, it helps you to stick with your plan. It helps you to stick with your process instead of just jumping in and then you don't know where price might turn around. Or sellers step in when you're in buys, or buyers step in when you're in sells. It just gives you a plan. It gives you a map. So I would say, if you can, instead of coming onto the market or coming into the market saying, hey, the market is going up, can I take a buy? I would instead ask, does this market structure, these key levels, does it align with my plan? Does it align with my bias? If it doesn't, that's not my trade. And until it does, I'll wait for the market to come to me. And yeah, that's literally it. I don't even want to complicate it. It's really not that complicated. If you don't remember anything from this, like I said, it is recorded, so I will post it. But if you don't remember anything, just remember a bias doesn't tell you what the market will do. We don't predict the market. The bias doesn't predict the market. It doesn't tell you what the market will do. It tells you what we're going to do as traders if the market gives us a setup. That's it. We don't build a bias and then force the market to agree with us. Like, oh, for sure this is going to happen, and we trying to force it. No, we build our bias, we wait for our confirmation, and then we execute our plan. That's it. So again, here's the process. Build your bias. So that means looking for your market structure, looking at your key levels, seeing if there's any context clues, wait for your confirmation, and then we execute. If we see it, we execute, and that's it. So we're no longer waking up automatically looking for a trade to get in. We're going to wake up, we're going to look at the chart, look at the information that is giving us, come up with our most high probability bias, and then wait for the trade to come to us. Once it comes with us, we're going to execute, and then once we execute, we're done for the day. So no more waking up like, oh, can I make some money today? No, we're going to say, what is the market telling us today? And based on what the market is telling us, we're going to apply our plan, focus on the process, and let the profits follow. That's it. So that's our new mindset as disciplined and profitable traders. And instead of us just talking about it and doing all that stuff, we just gonna go ahead and build a bias together today. Now, hopefully, we got a break. We got something, y'all. We finally got something. It's not a full break, but let's go over it.